The era of the human trader is officially over. Right now, sovereign AI agents equipped with non-custodial wallets are silently overtaking decentralized order books, providing liquidity with a level of precision no human could ever match. We are witnessing the birth of a new, tireless backbone for global on-chain capital. Imagine a major liquidity crunch hits a new DeFi protocol at 3 a.m. while most human traders are asleep. Within milliseconds, autonomous AI agents detect the imbalance, rebalance positions across chains, capture tiny arbitrage spreads, and provide fresh liquidity, all without a single person lifting a finger. Meanwhile, traditional market makers relying on human desks or even semi-automated systems struggle with latency, emotional decision-making during volatility, and the simple fact that they can't operate 24/7 at machine speed. We're not talking about simple trading bots anymore. We're talking about sovereign AI agents, LLM-powered entities with wallets, the ability to sign transactions, analyze real-time on-chain data and governance signals, and optimize their own yield strategies autonomously. Data and early projects show these agents are already managing meaningful TVL and DeFi vaults and liquidity positions. The shift is underway. Smart money on-chain is increasingly becoming smart code. Today, we're breaking down why AI agents are positioned to become primary liquidity providers and what that really means for markets. You are watching the Signal and Noise podcast. Make sure to like and subscribe as we analyze with no emotions or bias, just raw data analysis, pointing towards the signal and dispelling the noise. This is not financial advice. Do your own research. Human market makers and liquidity providers have powered markets for decades, but they face inherent constraints in fast-moving 24/7 on-chain environments. Latency in decision-making and execution, the need for sleep, emotional responses to volatility, panic selling or hesitation, and the sheer volume of micro-opportunities across thousands of assets and chains create ceilings. Traditional institutional desks bring expertise and capital, but often can't match the always-on nature of automated systems. In DeFi specifically, where protocols run globally without trading hours, human-centric approaches leave gaps that machines can fill more consistently. This doesn't mean humans are disappearing. Complex strategy, risk oversight, and regulatory navigation still benefit enormously from human judgment. But for raw liquidity provision, rebalancing, and exploiting fleeting inefficiencies, the edge is shifting toward tireless, data-driven systems. Early evidence from DeFi shows automated strategies already contributing significant depth, especially in newer or long-tail markets where human attention is limited. What makes today's AI agents more powerful is the maturing infrastructure allowing greater autonomy while preserving or enhancing security. Account abstraction standards like ERC-4337 enable smart contract wallets with programmable logic, batching, and sophisticated access controls. This lets agents operate with scoped permissions. They can execute specific strategies without full control over an entire treasury. Key management has advanced too. Multi-party computation, MPC, secure enclaves, and policy engines allow agents to sign transactions without ever exposing raw private keys. Solutions from teams like Turnkey and others focus on non-custodial setups, where agents act under verifiable policies and users/owners retain ultimate control or oversight. Agents can integrate directly with decentralized order books, DEXs, lending protocols, and oracles. They process real-time data, prices, volumes, governance proposals, liquidity metrics, as trading or rebalancing signals. Some operate as sovereign in the sense that once deployed with capital and rules, they can optimize yield, manage positions, and adapt strategies with minimal ongoing human input. Projects in the Fetch.ai/OLAS ecosystem and others emphasize autonomous agents that discover opportunities, collaborate, and execute across chains. Vaults like Theoric Alpha have demonstrated agents managing TVL by monitoring rates, prices, gas costs, and impermanent loss across protocols. Important nuance: true full sovereignty, zero human oversight or recourse, is still emerging and carries risks. Most practical implementations include governance layers, revocation mechanisms, or human/DAO oversight for safety and compliance. AI agents excel at what humans struggle with at scale: spotting and acting on tiny, fleeting opportunities across fragmented markets. Cross-chain arbitrage, for example, agents can monitor prices on multiple DEXs and bridges simultaneously, and execute in milliseconds where humans or slower systems would miss the window or incur higher costs. Machine learning models trained on on-chain data, sentiment, and historical patterns can anticipate liquidity crunches or volatility spikes before they fully appear in aggregate volume. This is especially powerful for the long tail of niche assets and newer protocols that human market makers might overlook due to complexity, lower volume, or higher perceived risk. By providing consistent depth there, agents improve overall market efficiency and accessibility. Real-world traction includes agents handling yield optimization, automated rebalancing, and liquidity provision in DeFi vaults and strategies. They don't get tired, emotional, or distracted. They just execute based on defined goals and data. Protocols and DEXs are increasingly designing with automated and agent-driven liquidity in mind. High-throughput chains, efficient order book or hybrid AMM models, and MEV-resistant mechanisms make it easier for fast agents to operate profitably. Incentive structures are evolving too. Rewards for consistent, predictable liquidity provision, rather than just one-off deposits, favor agents that can rebalance emotionlessly and continuously based on predictive models. Some projects explicitly optimize for programmatic participants that provide reliable depth across conditions. Liquidity itself is becoming more intelligent. Agents can shift capital dynamically to where it's most needed based on real-time and predictive analysis. This creates more resilient, self-adjusting markets compared to purely human-driven provision that can cluster or withdraw during stress. As agent-driven liquidity grows, it can help reduce certain forms of volatility tied to human panic or herd behavior. Markets become more efficient at capturing micro-opportunities and maintaining depth across more assets and chains. This supports the broader vision of a more frictionless on-chain economy, especially as tokenization brings more real-world assets on-chain and cross-chain activity increases. Agents can act as tireless coordinators and liquidity facilitators in this expanding ecosystem. However, this is not a complete replacement of human market making. Human oversight remains essential for high-level strategy, risk management, and regulatory compliance. Agent systems introduce new risks, smart contract vulnerabilities in the agent or protocols it interacts with, oracle manipulation, adversarial attacks on models or data feeds, and the challenge of ensuring agents act in users' best interests over time. Regulatory uncertainty around autonomous entities is another factor. Who is responsible if an agent causes issues? Liquidity provided by agents can be sticky or withdraw en masse if strategies shift, potentially amplifying volatility in stress scenarios if not properly designed. The right framing is that sovereign or semi-autonomous AI agents represent a powerful evolution in on-chain liquidity provision. Success will come from thoughtful integration, robust security, clear governance, and hybrid human-agent models. AI agents with on-chain capabilities are becoming significant liquidity providers because they solve real limitations of human-centric systems: speed, uptime, emotional consistency, and the ability to monitor and act across vast markets simultaneously. The future looks like powerful collaboration between human strategy and agent execution. What do you think? Drop your thoughts in the comments. Subscribe for more on AI plus crypto. This is Signal and Noise. The market makers are evolving, and so are the markets. Stay sharp, stay focused, stay grounded.